So welcome back to Forex Pros. From today we are starting the daily analysis of 4 basic pairs for now, which will help you understand the market, and I will try to make this video as educational as possible so that you guys can also learn from it. So what we will do, we will be doing a monthly multi-time frame analysis at the start of the week, which is today, and from tomorrow and onwards we will be doing only daily analysis and seeing what kind of trading opportunities are we waiting for. So first of all, if you're new to this channel, please subscribe and like the video and press the bell icon so you don't miss any of our analysis, or all videos are educational. And secondly, you can join our Telegram channel. The link is in the description, where we provide signals, and the signals are completely free. So without any further delay, let's go to the market. We will be discussing the market of gold. Then we will move to market of GBPUSD, then EURUSD, and then in the last but not the least, we will be discussing Bitcoin. And we will see what kind of trading opportunities, what is the trend in the current market. We will starting with the multi-time frame analysis. So I do recommend you watch this full video. At least it will help you understand the market much better, and it will also help you make your analysis, the way you interpret the market, much better. So let's go to the market. I'll be moving down at this corner, and yes. So starting from the gold, the things have been really crazy because the market just broke the monthly high. Just a moment, yes. So market just broke the monthly high, which was being held for approximately 4 or 5 months, and now there are a lot of questions in mind. Either the market will continue up towards 4,000 or the market will come down. So honestly, it doesn't matter. Why? Because most of us are day traders. We're not swing traders, or we're not like big investors. We're retail traders. And secondly, we just need to react as per the market does. We do not need to predict the market. So prediction is not good. As Richard Dennis and Bill Lipschitz used to say, observe the market, do not predict it. So we will be observing the market, and we will be understanding what is happening right now. So of course, if the market was stuck on a monthly time frame, there was a range bound on the weekly time frame as well. So right now what we can see that there was a very beautiful trend, very clear-cut trend. The market just broke above it, and a lot of guys that were asked want to know that can we predict if the market is going to up or down. Again, we do not predict. We can predict up to certain level of certainty, like 40, 50, 60%. Above that, that's all luck. So up to 60% you can predict the market, and you can try to understand what is going to happen. So right now we're going to see that what is happening and what kind of trading opportunities that the code provide. So right now, as on the weekly time frame, the break was very beautiful, and it was a big break. So there are basically right now 2 possibilities. One possibility is that this might be a fake move and the market might come down to 3406 possibility. And the second possibility is that this was a continuation towards the upside, and market could go in the above direction. So on the weekly time frame and the monthly time frame, right now we have seen the current situation, which we can see in the market, is that it has broken above the structure resistance. Now expecting it to come down or expecting it for continuation, of course there are more chances of continuation. So we just need to see the confirmations. What kind of confirmations does the market provide? So first of all, when the market is planning to break above or below a certain structure, support or resistance, there is a very common thing that you need to understand in the analysis. So first of all, as you can see, market started its bullish hike from here. So we will be taking the Fibonacci retracement. That of course, after a big move, we could expect a retracement, and we want to see how much the retracement can be. So at least we're expecting the retracement to be at least 0.382%. So of course we are expecting, we're not predicting, we're expecting the market to come down to this point, at least 34.87. that is more than 1,000 pips. So there's a possibility that market might come down, retest this area, and then go in the upward direction. But taking a long Fibonacci is not a good point, or a not good practice. Why? Because first of all, you need to understand the market is in a bullish trend on a daily, weekly and monthly. The higher the time frame, the more important and more stronger trend is. So first of all, you need to see is that you can see that market is currently going bullish, and each candle is respecting the low of the previous candle. You can see that, yeah. So each candle is respecting the low of the previous candle, and even when the market did make a bearish high dip, it still closed above the previous candle. So right now we're expecting the market to continue its movement as long as it does respect the market's lows. So as long as the market is above 35.44 on the daily time frame, I know it seems big at the moment, but we're expecting the market to go towards the upside. Now on the 4th time frame, the situation is much clear and much simple. So we'll be moving down only to this area for now. Okay. So on this area, what we can see, first of all, market did make a W pattern. So after this formation of this W pattern, we expect a retracement to the bottom neckline, which is around this point. So before continuation towards the upside. If you don't know what a W pattern is, mostly you'll see a pattern like this, not such a with such clarity, but of course you will see it multiple times. And whenever the market wants to move up, it will come down to the bottom neckline for the retracement, and then it will continue its movement towards the upside. So right now we have a clear-cut W pattern, a formation of the W pattern, and we have two basic retracement points. First retracement point is at here, and the second retracement point is at this point. So again, where we will be sending the signals and everything. So what points and how will we look at the perfect entry point on the 1 hour time frame. Okay. So on the 1 hour time frame, we have seen the market is basically respecting the low of this H1 candle, which is also a resistance, which is now acting as a support area. So as soon as the market is above this point, what we will do when the market comes and we see that the market is coming with a respecting this area, okay, respecting this 78, 79 area, we will definitely go for a bullish trade. Secondly, what happens if the market does not comes to this point? Okay, so as we're looking for a short-term trading opportunity with 50, 100 pips TP, so we will be also looking at this high. So even moving down on the much lower time frame, M30, I'm sorry, I just have a sore throat. So on the M30 time frame, what we can see is that first of all, market is respecting this high, and also the market is trying to respect this low. So on the M30 time frame, what we're expecting that let me show you much clear. So support resistance is not always a straight line. So the resistance is basically a trend line, so it's making a triangle. So when it's making a triangle, now the things are getting much simple. So first of all, we will not go in a bearish trade until the market breaks below this point. So when the market comes to this point and we see that market is respecting this point, we can go for a bullish trade. And secondly, what happens if the market breaks above it? So if the market breaks above it, we will wait for a retest and then we will go for a bullish trade. So on the gold market, if we remove all the noise and everything, we just need to wait for the right opportunity. We just need to wait, because if you take the trade prematurely, like if you take a bullish trade from this point, okay, let me explain what will happen. So if you take a bullish trade, the market will come down to test the 35.79 area, most probably. If it comes down, you will be like, it just came to hit my stop loss. And if you take the bearish trade, you take the trades expecting the market to like continue its movement towards the downside to 79. Again, I said it's a possibility, and you never ever enter in a retracement. You need to wait for the market to continue its trend. Trend is your friend, you must have heard that multiple times. So if you take a bearish trade and if the market goes up, then you're in a lot of trouble. So for this is for gold. And again, join our Telegram channel, because we will be posting signals in our channel. Now moving down on the GBPUSD. So on the GBPUSD, we kind of actually have a situation which is similar to it. So I won't be going on the daily weekly time frame. No, I think I will be. Yeah. We will be going on the weekly time frame, but we will not be going on the monthly time frame. So the reason is that the weekly time frame is giving out a very good and clear picture. So first of all, on the weekly time frame, what we can expect, what we are seeing is that the market basically made a first shoulder, then the head, and the second shoulder. So basically, this is another pattern, textbook pattern, when the market makes a head and shoulder pattern, inverse head and shoulder pattern, then we can expect the market to continue its movement towards the upside. But this pattern is on the weekly time frame, so the move, if the move comes on the weekly time frame, it will be a huge move. So basically, gold and GBPUSD being related to the same USD pair, we can expect the same move, and this also gives us some indication that we might see some continuation on the gold as well. So moving down on the daily time frame now, things which we need to understand is that first of all, the market did respect a daily resistance area, which is very important, because in this area, just a moment here. So this is a daily resistance area, and the market is just surviving below it. So we can expect the market to go towards the upside. Now, looking on the daily time frame, we might want to like enter right now, because it seems so good that we can take a bullish trade, and at least we could go and take some 60 pips profit. But if we move down on the 4-hour time frame, again a very beautiful pattern. I'm a very big fan of W patterns. The reason is that because I've not seen market make much moves without creation of the W pattern, bullish moves. Okay, so we can expect the market to come down to this point, respect it, and then continue its movement towards the upside. Again, what happens if the market does not respect it again and the market continues without it? We do not want to miss any trade. So first of all, my advice is that we know that we are in a bullish trend. Okay, so whenever you are in a bullish trend and the market is planning to come down, and I do not recommend taking the bearish trade, because it's in the opposite direction of the trend. But again, we will see that what kind of trading opportunities, and if you want to take the entry, we just don't want to miss the trade, and we are good with the risk management, then what will we do and how will we do it? Okay, so first of all, on the M30 time frame, let's see on the 1-hour time frame. Okay, because on GBPUSD going to M30 time frame is not such a good idea. The pips are huge, so I recommend going to 1-hour time frame. So the things are quite simple. First of all, the market did respect this support area. Okay, so this support area was respected, and right now we are currently at we have this resistance area. So this is basically the dead zone of the market. Whenever you are in a dead zone of the market, you never trade, because the dead zone, either you take the buy or the sell trade, you still have the 50-50 probability of being stopped out. So first of all, we'll be waiting for the market to at least break in one direction. So the best possibility would be if the market comes down, break below this, retest this area, and after that, as soon as it enters and retests this area, we can go for a bullish trade. And in case if the market does not feel comfortable doing that, we'll be waiting for the market to at least break above it, retest this area, and still we will be going for a bullish trade. Of course, the number of pips that we'll be capturing will be missing 20-30 pips, and we'll be only going for the 40 pips. But again, going for a safer trade is much better, because in the market we need to survive. We do not need to capture every possible pip. So again, if you consider the possibility that it's GBPUSD, and if you're getting 40 pips, and of course if the market comes and retests this area, our stop loss will be something around at this point and entry around this point. So with a 1:2 probability, we will be going for at least 20-25 pips stop loss and 40-60 pips TP. So I think that's a very good deal, considering the nature of the pair, that its movement is not that slow on the daily basis. Sometimes it's low, but the number of pips that it gives out are very low. So now on the Bitcoin market, the things are like much interesting, because there's a clear-cut move going on right now. And personally, I think that trading on Bitcoin is much riskier than trading on any other pairs, because it's a crypto market. And considering or comparing the experience I have in gold market and other currency pairs, this is the least experienced pair that I trade. But still, it does respect the technicals very beautifully most of the times, other than the times when it's like just just going up. So on the daily time frame, again we can see a very textbook pattern, the head and shoulder formation. So head and shoulder pattern is being formed. So what do we expect? We expect the market to go towards the upside. And of course, another thing which you need to understand and remember is that this was a resistance area, and if the market is like first time it did respect this resistance area, and again it's approaching, and you can see that it's only the tails approaching. This time we're expecting the body to approach. So a movement like this, we can expect the market to break the structure resistance, and on the Bitcoin we're expecting a move at least up to $116,000 and 835. So this will be a very good trade, but we need to find the exact confirmation, exact trade that would help us. So right now again the market is basically in a dead zone. This is the resistance area, this is the support area. So capturing the dead zone is another important thing, because most of us we blow the accounts while the market is in that dead zone, and when the time is there for the market to make that big move, we are mostly out of capital, or we got so many stop loss hit that we do not have that confidence or courage to like go in the trade. So it's better to wait, and if you're planning to risk 1%, you can go for 1.5% or 2% risk per trade if you wait for the right opportunity. So on the 4-hour time frame, you can see the market is currently stuck in this zone, and the market did make a fake move. So right now, if you're expecting the market is going to go up, rather this is 4-hour time frame, and whenever the market is in the 4-hour time frame, the things get very complicated. The reason being that is if the market plans to stay here for 3-4 hour candles, which means that you'll be stuck for at least 12 hours. So don't make things complicated. So we'll be going to a smaller time frame, and we just need to wait. I'll be removing this resistance because we are expecting the market to go in the upward direction, and of course whenever you're taking a trade, you need to put stop loss, and you need to accept the possibility, accept that the market might hit your stop loss and move in the right or the wrong direction. So the possibility of stop loss being hit is always there. So what we need to, so you can see on the M30 time frame, the dead zone is quite low. So right now, if we take the trade and the market is stuck for at least 4 M30 candles, it will be only 2 hours. So still it's a good deal, but again what we need to do, we need to wait for the market to break above this area, and on the retest what will we do, we'll be taking a bullish trade. And why not before it? Because we don't know how much this range bound area will be going on. So basically there are 3 basic moves in the market: bullish, bearish, and the range bound. So range bound is the worst kind of move that you want to get stuck into. So right now, if you take the trade and the market plans to like still stay here, it's not a good trade. So we'll be waiting for the market to give out a confirmation, and as soon as the confirmation comes out, we'll be sharing the trade as well. Okay, and I think yeah, this is the resistance area which we're expecting. But again, on BTC, I prefer doing the swing trades, the long-term trades. The reason being that is BTC market is quite complicated. Not that it's not difficult to predict the market. The problem is that the normal movement of the gold market, like if you see it's going. Okay, so BTC, what it will do, from the very point you will take the trade, the market is going to be stuck like at the exact point, and it's quite frustrating. So I prefer going for a swing trades in the Bitcoin. I will be giving out a signal in the Telegram channel. If you have not joined it, the link is in the description. Do please join it. And so again, if the market comes at this point, what will be our stop loss? Our stop loss will be around this point, and our entry will be around this point. So basically, let me see how many pips will the stop loss be. So we're expecting the stop loss to be around 40 pips, and the TP will be really big, and this is a good risk reward ratio trade. That's why I'm much interested in this trade, and I do not want to miss it. And we're talking about at least 500 pips trade. So a 500 pips trade is a really good opportunity, a trading opportunity. I think it's 5,000 pips. I'm not much familiar with the Bitcoin. Yeah, I think it's 5,000 pips. So if we're taking 40, 50, or at least 100 pips stop loss and capturing 5,000 pips, I think this is a really good trading opportunity and really good move. So I hope you like the analysis. I tried to make the video as educational as possible. So if we get the trading opportunities today, we'll be sharing the signals. Again, tomorrow we will be discussing the same currency pairs, or if you want me to add another pair into the list, do let me know. I will definitely do that. And the reason being that is we will be discussing the daily market, daily analysis, so that every day you understand, you know what you are waiting for. So this will get you, help you understand the market much better. And again, the reason for doing the daily analysis that sometimes we're so stuck, like we're stuck on the, we are expecting the market to go in a bullish move. So again, if the market comes down, it changes its direction, a new analysis will fresh our mind and we'll be able to do the analysis again and understand the market much better. Thank you.